Most people in the UK think that tax is just something that happens to them. You work your hours, your boss takes the tax out automatically, and whatever lands in your bank account at the end of the month is what you assume you're entitled to. No questions asked. But what if I told you that for millions of people, that number is wrong? Not because your employer is trying to cheat you, not because HMRC made a dramatic mistake, but because the UK tax system is built on estimates. And when those estimates are off, you're usually the one who loses. Under PAYE, the tax you pay each month isn't a final calculation. It's a prediction. And if that prediction is too high, the system doesn't automatically rush to give you your money back. Instead, it quietly keeps it, which means a huge number of workers are unknowingly giving the government an interest-free loan with their own hard-earned cash. Money that could be paying bills, covering food costs, going into savings, or simply making life a little easier right now. And the worst part, most people never check, because they don't even realize there is something to check. Today, we're fixing that. In this video, I'm going to show you exactly how people overpay tax, why it happens far more often than you think, and, most importantly, how to reclaim what you're owed. We'll go through the 5 most common tax claims that UK workers miss every single year. These aren't niche edge cases. They apply to ordinary employees, part-time workers, people with more than one job, and anyone who's had even a small change their working life. I'll also explain the less obvious rules for 2024, the ones HMRC doesn't exactly advertise, including how changes to working from home, job expenses, and tax codes are catching people out right now. Then I'll walk you through the HMRC personal tax account step by step on screen, so you can follow along and check your own situation. No accountants, no phone calls, no complicated forms. Just a clear process you can do yourself in under 15 minutes. We'll cover why your tax code might be wrong even if you've never changed jobs, how having 2 jobs, switching roles, or getting a pay rise can trigger overpayments, what expenses you can legally claim back, even if no one ever told you about them, how far back you're allowed to claim refunds, yes, it's multiple years, and what happens when HMRC already knows they owe you money, but won't actively tell you. And if you stay until the end, I'll show you how to check whether HMRC has already issued you a refund, sometimes in the form of a check or payment sitting there unclaimed, because you didn't log in and look. This isn't a loophole, it isn't bending the rules, and it definitely isn't risky. It's simply understanding how the system works, and making sure you're not paying more than you legally have to. So if you've ever worked a job in the UK, there's a real chance this applies to you. The definition. For HMRC purposes, a uniform isn't just anything you wear to work. It must either clearly identify you as an employee of a specific organization, for example, a branded polo shirt, jacket, or uniform with a company logo, or be protective clothing required to do your job safely. This includes items like medical scrubs, steel-toe boots, high visibility gear, safety helmets, or specialist gloves. Everyday clothing, even if your employer insists on a dress code, does not count unless it meets one of these 2 criteria. The hidden claim, small tools. What many people miss is that tax relief doesn't stop at clothing. If your job requires you to provide small tools or equipment yourself, you can also claim tax relief on the upkeep, maintenance, and replacement of those items. For example, hairdressers buying and maintaining their own scissors or clippers, chefs purchasing their own knives or sharpening equipment, mechanics supplying their own hand tools, tradespeople replacing worn or broken equipment. Even if your employer doesn't reimburse you, HMRC still allows relief, as long as the tools are essential for your role. Pro tip: the flat rate allowance. You don't need a folder full of receipts to make a basic claim. HMRC assumes a minimum annual cost for cleaning, repairing, and replacing uniforms and tools. This is known as the flat rate expense, and for many roles, it starts at £60 per year. That means you can claim tax relief on that amount without providing any evidence. However, if your actual costs are higher, For example, you spend more on laundry, repairs, or tool replacement, you can claim more. That's when receipts become important, as HMRC may ask for proof to support the higher figure. Industry spotlight. Higher rates you might not know about. Certain professions qualify for much higher flat rate allowances, often without workers realizing it. If you work in the police, armed forces, healthcare, engineering, or skilled trades, your flat rate could be £100, £120, or even £150 per year. These rates are set out in HMRC's internal guidance, specifically the EIM 32480 manual, which lists approved amounts by occupation. HMRC won't proactively tell you which rate applies to you, so it's up to you to check and claim the correct figure. The key takeaway: if you wear a uniform, use protective clothing, or supply your own tools for work, there's a strong chance you're entitled to tax relief. And many people have been missing it for years without realizing. And remember, you can usually claim this retroactively, meaning a small annual allowance can quietly turn into a much larger refund over time. If you're a regulated professional, there's a very good chance you're being taxed on money you never truly earned, because it went straight from your payslip to a regulator, professional body, or union, just so you could legally do your job. Most people assume that because these payments are just part of the job, there's nothing they can do about the tax. In reality, HMRC allows tax relief on many of these fees, but only if you actively claim it. The rule: HMRC's wording is very specific. The subscription must be wholly, exclusively, and necessarily for your employment. In plain English, that means the fee must be required for you to do your job, not optional, not a personal benefit. For example, nurses are required to pay registration fees to the NMC. Teachers often pay union or professional body subscriptions. Accountants, engineers, and other regulated professionals pay licensing or membership fees. If you must pay it to work, HMRC generally accepts it as claimable. The List 3 secret. This is where most people miss out. HMRC maintains a searchable database called List 3, which contains approved professional organizations and unions. If your regulator, professional body, or union appears on that list, you are automatically eligible for tax relief on the subscription. HMRC doesn't advertise this widely, and they won't tell you that your organization qualifies, so you have to check and claim it yourself. Common misses. A surprisingly common mistake is assuming you can't claim if your employer pays some of the fee. That's not true. If your employer covers part of the cost, but you personally pay the remainder, you can still claim tax relief on your portion. Another common miss is forgetting old memberships. People cancel or change roles and never realize those past payments are still claimable. Real-world example. Let's say your union subscription is £15 per month. That's £180 per year coming out of your post-tax income. If you're a basic rate 20% taxpayer, HMRC owes you £36 per year. On its own, that doesn't sound life-changing, but now backdate it for 4 years, which HMRC typically allows. Suddenly, that's £144 back in your pocket. No forms, no audits, just money you overpaid being returned to you. That's a decent dinner, a weekend away, or a bill you don't have to stress about. This is the one tax break HMRC actively wants eligible people to claim. And yet around 2 million couples still haven't. Not because it's complicated, not because it's risky, but because most people either don't know it exists or assume it doesn't apply to them. It's called the marriage allowance, and when used correctly, it quietly reduces your tax bill every single year. The logic: every individual in the UK has a tax-free personal allowance. For the current rules, that allowance is £12,570. Now imagine your spouse or civil partner earns £10,000 a year. That means £2,570 of their tax-free allowance is going completely unused. It simply disappears. By claiming the marriage allowance, the lower earning partner can transfer £1,260 of their unused allowance to the higher earning partner. HMRC sometimes describes this as gifting part of the allowance. And that's exactly what's happening. The impact: once that allowance is transferred, the higher earning partner pays 20% tax on £1,260 less of their income. That works out to £252 per year in tax savings. It's not a rebate you have to reapply for each month. Once it's set up, it automatically reduces the tax bill every year you remain eligible. Critical warning: read this carefully. This allowance is strictly limited to certain income levels. You cannot claim if either partner is a higher rate taxpayer, meaning taxable income over £50,270 for the relevant tax year. It is designed specifically for basic rate taxpayers and couples where one partner earns little or nothing. Even £1 over the higher rate threshold can disqualify you for that year. So it's important to check your income for each tax year individually. The death and divorce rule. This is the part almost no one knows, and where a lot of money is quietly left unclaimed. You can still claim marriage allowance for past tax years even if your spouse or civil partner has since passed away, or you are now separated or divorced. As long as you were legally married or in a civil partnership and met the income rules during those specific tax years, the claim is still valid. HMRC allows backdated claims for up to 4 previous tax years, which means the refunds can stack up quickly. This is where the significant money is found, especially when it comes to peripatetic workers, individuals with no fixed office location. The commute rate. You cannot claim for driving from your home to your regular office. This is a personal choice that HMRC Department of Work and Pensions does not condone. The temporary workplace. If you find yourself sent to a different site for less than a year, that site is considered a temporary workplace. You may be able to claim for every mile you travel, every train ticket you use, and sometimes even your lunch expenses. Mileage allowance relief mark. If your boss provides you with a pay rate of 4-5p per mile, fantastic news. If they do not, you can still claim some relief by applying for 20% of that 4-5p back from the government. For instance, if you drive 2,000 miles a year for client visits and it costs you £900 annually, you might end up gaining £180 cash from the government. Expense tracking. To ensure you are not overspending on mileage relief claims, it is recommended that you keep detailed records of your mileage and all related expenses. This helps to ensure that you only claim what you deserve. Be mindful of your exposure. Whenever you travel, always make sure you are aware of the risks that may be associated with certain areas. If you find yourself in an unfamiliar place, it is best to err on the side of caution and take precautions such as traveling by public transportation or having a designated safe place to rest your car when needed. Lastly, it is important to remember that even if you do not qualify for mileage relief, it does not mean you cannot manage your workplace expenses on a more efficient and cost-effective basis. For example, you may choose to telecommute or work from your home, if that is more suitable for your work schedule and lifestyle. In conclusion, it is essential to be mindful of the complexities surrounding mileage relief claims and the various nuances associated with them. By keeping a close eye on your expenses and carefully adhering to the necessary claims processes, you can ensure that you maximize the benefits of these policies while also avoiding potential pitfalls. Whatever you do, do not Google tax refund. You will be hit with ads for companies that look official but take a 40% cut. 1. The portal. Go to gov.uk and search claim tax relief for expenses as an employee. 2. The ID. You need a government gateway user ID. If you've used the NHS app, you might already have one. 3. The P87. This is the form name. It will ask for your employer's PAYE reference. Find this on your P60 or payslip. It looks like 123. AB 1 to 3 4 5. 4. The timeline. Once submitted, Keep an eye on the post section of your HMRC app. It will tell you the date they expect to finish your claim. If this video saved you money, please subscribe. My goal is to help you keep more of what you earn. Check out this next video, how to set up a lifetime ISA to get an extra £1,000 a year from the government for free.